Greetings, Dr. Jeffrey Scott here, and this is my Market MRI Pro update for July 21st, 25. Big day in my life. I got married 40 years ago to a wonderful woman who, for some reason, is still letting me do this on our anniversary. Woohoo. Um, there have been a lot of stocks that we've been tracking that just keep going up. Well, they don't go up every day, and some days extended stocks just pull back, and today was one of them. And the question is this anything more than that? Even great growth stocks to pull back 10, 15% in an uptrend, certainly not unexpected. My email address is marketmripro@gmail.com. My Google group is called Top Down Trader. As always, these are for educational purposes only. Anything we talk about should be taken in the spirit of education, not investment advice. The intent of the video is to show you how I use my tools for top-down trading. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock I mentioned in this report. Trading stocks and options should be considered risky, and you should always consult with your financial advisors before making trades. And I have tools in multiple platforms. My Google group's called Top Down Trader. It's free. You get access to me. You get some free education events. You get the videos I don't post on YouTube, and you get a discount on any of my tools. Just go to Google Groups, sign up, and let me know how you want to be contacted. Welcome to the family. I will be doing a live meeting in Palm Beach Gardens, October 27th and 28th, working on finalizing the site. There is no question about whether we have the meeting or not. I've already taken the day off work. I've got my boat ready for Sunday night. Cost is $12.50. I'll feed you and water you throughout Sunday and Monday. Dinner cruise on my boat Sunday Eve, 2 packed days of education and software instruction. Back to back with John Person seminar October 25th and 26th. His is at a separate fee, but come to both. And for more information, contact me at marketmripro@gmail.com. And yes, if you don't have my tool, you'll get a discount at the meeting, rather significant discount. Know your news and earnings. Well, today was the leading economic indicators. I think they came in soft. Tuesday, we got Powell opening up a banking conference. We're in a blackout period for the Fed. I doubt he's going to say anything new. And then Wednesday, we got home sales. Thursday, jobless and PMIs. Friday, durable goods. Next week is the Fed meeting. But whoa, Nelly, as they used to say on college football, look at all the earnings we've got this week. So busy, busy, busy week coming up. A lot of FANG stocks. You got Google, Tesla, among others that will be released. It's a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. For more information about anything I talk about, just contact me at marketmripro@gmail.com. If you have questions or issues with the program, missing stock splits, missing data, anything, contact Praveen at coding@marketmripro.com. All right. So in the market, a little bit of a flip-flop. The Russell, which has been leading, was lagging. You'd see here, Q's led up 0.5%, 0.19 for spiders, 0.04 for the Dow. Volatility was up, or excuse me, was down, but it closed at the high of the session, while the Russell down 0.4 and Bitcoin down 0.52 closed at their lows of their session. The Dow was down as well. New highs minus new lows seem to chop about in half on the day, but they're still positive. Leading sectors in the S&P 500 are communications, materials, discretionary real estate. On the bottom, energy, healthcare still, industrials, which have been doing very well, and financials. Tech is up in the middle of the day, up just 0.15. And then over here, you can see at 40% of the S&P 1500 were up, 49% of the NASDAQ, and 43% of the NYSE. So a little bit worse than a 50-50 day in the U.S. markets. If we look at the timing brief, the daily charts, we've talked about how the bongos have turned red on the Russell and the diamonds, but until we trade below the 30-period WMA, there is no signal. So right now we remain in a buy signal on the dailies. I'm getting a little nervous here, but really we'll see what happens. On the weeklies, we're still in a buy, and I believe all the bongos will still be Oh, actually, let's go. Let's get to the weekly. Got all excited here, but that wasn't the weekly chart. So on the weekly chart, everything is still copacetic. We're blue on the bongos above the WMA. We remain in a buy on the spiders, the Qs, the diamonds, and the Russell. If we look at the index ETFs, just get a sense of what happened in the market. Maybe not much is the right word. You could see we traded higher on the spiders. We closed where we opened. Kind of a shooting star looking day, and it was up 0.19%. We're going to get to that period of seasonality where the market at least flattens out for a while, and maybe we're there. We are consolidating. Nothing here is broken, although that can be the lead to a number of candles in a row that could signal something worse. The Qs, let's open this up. We look at the Qs, not nearly as bad. Open, close, trade a little bit higher, but close about the mid-range of the bar, up 0.52, and they were the leader on the session. And if we look at the high-low jump, it says 80, so still not too extended. The diamonds, take a look at them. Again, it looks a lot like the spider. Opened, traded higher, and closed at the low of the session. These are topping bars. Again, it does this mean the market's topped out and we're going down? I got to use all my signals. Right now, it doesn't say that, but it could be leading to that. Let's take a look at the Russell. I'm going to have to go there. You see Russell had another big down session, down 0.40. Doesn't look like on massive volume, still holding above the 17. If you step back and look, they're all still consolidating. The volatility, you'd expect it to be up on the market, was up 1.46%, but it actually closed well off where it opened and and well off the high. And if you look at the dollar was down in the market 0.66 today. Is it failing at the 50, and will that lead to support for the U.S. equities? Looking at the commodities, so risk was off on the stock market. It was on in commodities. Gold gapped up, still below the highs, but up 1.5%. Silver gapped up 2%. Recent highs, but nowhere close to the 2011 highs. Oil going sideways. Natural gas broke down again. Natural gas, until it lives above the 200, I don't care about. I guess one good thing if you're long these markets, you could see the 10-year came down 1.4%, and the 30-year came down 1.34% and moved significantly below, well, significant, 4.92, considerably below the 5% range where it had been hovering the last several sessions. If we look at the buckets, we're going to see really no signals here, still a bell-shaped curve for the most part, and not in excess above or below the bands, no signal. If we look at market breadth, on the left we have the NYSE, and on the right we have the NASDAQ. So the NYSE looks like it's sort of flagging here, while the NASDAQ, didn't have a great close, but traded higher on the session. So very different than NYSE. Broad-based is already pulling back, and the broad-based tech-related NASDAQ pushing higher. You could see a trend lower on the stocks above the 20 in green, 50 in white, 200 in red. Kind of similar, but not as much on the NASDAQ. And if we look at new high, new lows, they're up on both. Advanced declines, positive on the NASDAQ, negative on the NYSE. Up down volume, positive on the NASDAQ, negative on the NYSE. And then the only signal we got down here is the BANGO. So the NYSE definitely weakening compared to the NASDAQ. Looking at the market breadth slide, you could see that the 13-week new high, new low has started coming down on all the indexes, so that's off the table as a signal until it gets to the bottom or the top. You could see on each of them on the spiders, stocks above the various moving averages turning down. On the NASDAQ, a lot flatter, turning down on the S&P 1500 and turning down on the Russell. What's interesting is the um, RSI is still divergent on the spiders. It's turned positive. It's not no longer divergence on the Nasdaq. I think it's still divergent on the S&P 1500, and it's definitely divergent on the Russell. So there's a lot of things underneath, whether we're looking at stocks above moving averages, divergences on the RSI, the number of stocks in the S&P 1500 with MACD divergences. There's a number of things that says, hey, maybe not all is great with the U.S. markets. From a ratio chart perspective, the big thing today was we've got some broadening. We got communications really popped, discretionary popped, technology still looks strong, staples and real estate and healthcare weak, but utilities, we talked about them over the weekend, especially those electrical utilities. Some of them are driving the utilities higher. Energy very weak. Materials can't, trying. And industrials, which is over here, is giving some up. They've been leading a little bit for a while. All right, looking at the JAS layout, one of the things I just wanted to point out is that there's a reason one takes profits. And Lou, is it over? I don't think it's over. You had a pretty significant pullback here, and it was down 10% on the day. No, was it really? Yes, it was down 10% on the day. Um, Opened a little higher, closed lower. Not only is that a bearish engulfing pattern, but one that took out multiple days on the of the past days on the run up. It was down. Let me check that again. I do think that's right. 10.16. Now, you had a pullback here, you had a pullback here, you had a sideways move here. I don't believe this is done going up. I still think the story is intact, but it had a downgrade or a neutral and a target of 230. So it wasn't a big surprise when I saw that it sold off. There's a reason why you got to take profits on runs like this. Even if you took half off and book profits, you're still in a pretty good position. We saw other stocks give up some today. Hood, similar story. Now, this one was a little bit more obvious with the doji after the big run on Friday. Um, Another one in a similar space as LEU is Oklo. Again, a similar sell-off closing near the lows. It'll be interesting to see how these stocks behave tomorrow. But we saw a number of them, GEV, the number of the electrical power stocks sold off. Is this something to be concerned about? Well, again, that's why you take profits. You can always get back in. Is it just a one-day wonder after too much hoopla and too much run? Maybe. Is it rotation out of these names? Time will tell. There were things that looked pretty darn good today. One of the ones we talked about over the weekend was ALAB. Oh, not going to show it today. I guess they didn't stay. Let's look at ALAB. Oh, that's because I changed computer. Big move up. This is when we talked about breaking out from this consolidation, and it pretty much saved my portfolio today. But ALAB, big breakout. So I look at a large group of stocks on a nightly basis. Uh, My impulse list is everything in the NASDAQ, NYSE, and Amex over $1 and 100,000 shares traded. And as you can see here, that represents 3,700 stocks. If we look at the top down, we can see them each packed into the various sectors and industry groups. These will be different looking than the S&P 500 sectors because, hey, I got 3,700 stocks in mine. If we look at the leadership here, communications, materials, and real estate, interesting. Let's just look at them and see if anything looks good. Let's take the first top 10, 2, 3. Very different group than what we saw yesterday, 215. Let's drop a filter on Let's take out everything below 5 and 500,000 shares traded, leaves you with 106. Let's rank them by 2-day momentum. Let's just take a look at a couple of these. The first one, RS, is Reliance Steel. Looks like a growth stock, doesn't it? Wow. Okay. Is it extended? Let's look at the last bar. High jump's 82. It's got a little bit of room to run. Relative strength and OBV look good. Good volume. Next one on the list is Meta. Talked about how Meta was at a good bounce point, and it bounced. Remember the hammer I talked about on Friday? That was pretty predictable. Google, another one that we thought would work. It broke above this line last week, retested, had a nice breakout. A lot of FANG stocks did good today. Charter Communications, yeah, kind of a nice session in a weak chart pattern. AEM, a gold stock, gold and silver stock, sideways move and a breakout off the 50. If you think gold is going higher still, that looks really good. T-Mobile Communications, not yet as far as I'm concerned. Another Google. Steel Dynamics, the steel stocks seem to be waking up. CENX is an aluminum stock that I was looking at over the weekend. A nice breakout here on good volume. Was it earnings? Let's leave it. Nope. What was the news? Some refinancing. Nothing relevant. Okay. Verizon had good earnings today. You could see beat on earnings, beat on revenue, pays a 6% dividend. Another gold play, AU. Beautiful run up, pull back to the 50 and a breakout. I think I like AEM better from a chart pattern, but that one looks great too. Cleveland Cliffs. Earnings were out today. Horrible. Yet a big surprise. Revenue was out. Horrible growth, but a surprise. Is this type of stock the stock that's going to start rotating back into favor? Relative strength and OBV look good here. The dots look good, clearing the 200. You got an obvious place for a stop just above the 200. Cleveland Cliffs looks interesting. So I typically will go through some of the top stocks there. One we looked at over the weekend was Twillo. Didn't do much in the market today, but I like where it's sitting up here. Another thing I like to do is bottoms up. So I'll go back to my impulse view. And I've got price and volume, but let's drop another filter called the 2-day momentum up. And let's take a look at what we have here. ABCL, Epsella Biologics, cheap stock. Is there a story? Upgraded to buy. Growing optimism on earnings. Don't know anything about the stock. It kind of looks like it's getting extended already. CNTM, another cheap stock. I mean, this is a biotech probably with look at the volume, look at the blue dots, look at the OBV, relative strength turning up. Um, Not much in earnings or story here. Was there anything in the news? Immunology drugs. These are story stocks. If you know the story, it might be a good play. I love the chart pattern, but it's a cheap biotech, and biotech's been out of favor. Duke, we talked about this one over the weekend. Here's another one of the utility stocks breaking out. Certainly not extended. Relative strength looks like it's turning up OBV, coming out of a squeeze. I like Duke, maybe one of the better ones we've looked at tonight. EVLV. Ooh. Earnings are not out to September. Industrial, don't know anything about it. Look here. Evolve, AI-based solutions, safer experience. Selected by FIFA. Better earnings prospects. All right, this might be interesting. When you look at it, let me turn that off. Why? Stair stepping higher. FTS, Fortis, another utility pulling back in a breakout today above the 50. Very viable, in my opinion. NVTS, Navitas Semiconductor, cheap semi, no revenue, no earnings, minimal revenue, probably better looking things. And then OGE, which is another electric utility. Earnings are not out to July 30th. This one pays a 4% dividend. You know, several of the utility stocks got hammered in the market today, some that had run away. But you look at Duke, you look at something like this, I think there's some things here to buy. Be careful. Market feels like it might be getting toppy. Topping is a process. Bottoming is an event. And again, I'm seeing a number of things that have my ears perked up thinking about topping. But as I pointed out a week ago, we've got no phoenixes, no Hindenburg Omens, nothing that says we've topped. Have a great day on Tuesday. I'm traveling, probably won't do another video until Wednesday. Take care, everybody.